What is beyond ESG? ESG is the true impact investing strategies that drive real change. For years, ESG, environmental, social, and governance, has been the dominant framework guiding what we call responsible investing. It has brought sustainability and corporate accountability into the spotlight, and that in itself has been an achievement. But today, an important question is surfacing more and more often. Is ESG enough? The answer increasingly is no. ESG, while useful, often focuses on how external risks affect a company's bottom line, not on how that company affects the world around it. If we want investing to create genuine value for both shareholders and society, we need to move beyond ESG. That's where true impact investing comes in. What is true impact investing? Impact investing is not just about screening for risk. It's about intentionally deploying capital to create solutions. There are three principles that make it distinct. Intentionality. Impact is not an accident or a side benefit. The capital is directed with a clear goal, solving a social or environmental challenge. Measurable outcomes. Success is tracked not only in financial returns but also in real-world outcomes. Emissions reduced, children educated, communities empowered. Additionality. True impact happens when the investment leads to results that would not have occurred otherwise. In short, impact investing doesn't just ask, is this company resilient to risks? It asks, is this company creating positive change? Strategies for true impact investing. So how do we practice this in real terms? Let's explore 5 strategies that drive real change. 1. Invest in mission-driven enterprises. Start with businesses whose DNA is impact. Their core model, not just a CSR side project, tackles big challenges: clean energy, sustainable agriculture, financial inclusion, affordable health care. These enterprises prove that profitability and purpose are not mutually exclusive. They are mutually reinforcing. 2. Prioritize measurement and transparency. Impact that cannot be measured is impact that cannot be trusted. Frameworks like the Impact Management Project or IRRIS Plus provide clear, verifiable metrics. By holding ourselves accountable to data, we ensure we're not just telling good stories, we're proving good outcomes. Transparency builds trust, not just with investors, but with communities, governments, and customers. 3. Support underserved communities. Much of the world's potential lies locked in regions where traditional finance rarely flows. By channeling capital into microfinance, local entrepreneurship, or education, we unlock opportunity. This doesn't only create financial returns, it fosters inclusive growth, builds resilience, and strengthens social fabric. 4. Blend capital for scalable solutions. The scale of today's challenges, climate change, inequality, healthcare access, is too great for any one investor to solve alone. Blended finance models, public-private partnerships, and concessional funding can de-risk projects and attract larger pools of capital. This is how small pilot projects become scalable, system-changing solutions. 5. Think long-term, not quarterly. True impact is not immediate. It unfolds over years, sometimes decades. Unlike short-term ESG performance metrics, Impact investing embraces patient capital. The mindset shifts from quarterly earnings to generational progress. And that's what creates enduring value for both investors and society. Why this matters to society. So, why should we care? Why does this matter beyond financial performance? Because impact investing delivers outcomes that change lives. It creates jobs and stability in vulnerable communities, accelerates the transition to clean, renewable energy, expands access to healthcare and education, builds resilience against climate change and global shocks. In a world where challenges are complex and interconnected, this approach ensures that every dollar of capital is not only protecting portfolios, but also building a stronger future. A call to action. We are at a crossroads. Capital, in the 21st century, may be the most powerful tool we have for shaping society. The future of investing cannot be just about avoiding harm. It must be about actively creating good. If investors, entrepreneurs, and policymakers commit to these strategies, we can move into a new era, an era where financial performance and societal well-being are no longer in tension, but are partners in progress. The message is simple. Beyond ESG lies true impact. And true impact is the future of investing. Thank you for listening. Kindly like, share, comment, and subscribe to our channel. And I will see you